Digital yuan will revolutionize Chinese retail payments, central bank exec. A Chinese central bank chief has claimed that digital yuan will revolutionize the way the nation makes retail payments and suggested the CBDC could one day completely replace cash. Per Yicai Changchun, head of the Digital Currency Research Institute at the People's Bank of China PBoC, made the comments at the China International Financial Annual Forum this week. Mu said it would be important to ensure that the digital yuan was accepted in all retail payment scenarios in mainland China. He also called on the PBoC's banking and ePay provider partners to streamline their QR code technical protocols. At present, wallets are hosted by the PBoC or a number of mainly state-run banks. The private sector, ePay powerhouses WeChat Pay and Alipay have also added e-CNY functionality to their apps. But all of these partners have thus far sought to integrate e-CNY payment options with their own conventional pay interfaces, rather than with one another's offerings. This fact, Mu suggested, means that merchants can face IT-related adoption issues with their POS devices. The South China Morning Post quoted Andrew Fay, a partner at the Hong Kong law firm King & Wood Mallesons, as explaining, a single, unified, and standardized QR code that supports e-CNY payments as well as Alipay, WeChat Pay, and existing electronic payment methods can incentivize more widespread use of e-CNY by making it more convenient for consumers to use and for merchants to accept e-CNY in the retail context. China's digital yuan new adoption drive. Mu added that banking and ePay partners also needed to perform a series of upgrades to help drive further CBDC adoption efforts in the retail payments sector. But analysts have claimed that Mu's comments were actually aimed at retailers, not partner financial institutions. Jai Hu, a professor at the Shanghai Jiao Tong University's Advanced Institute of Finance, opined, Mu was saying that all merchants should get ready, both in terms of their willingness and their tools, so that if customers want to pay with e-CNY, they must accept it. Toward a cashless society. But Mu's wider goal is likely a radical reduction in China's dependence on cash, or even a total elimination of analog forms of currency. He said in the future, commercial, electronic payment tools may fully meet the needs of the digital economy and society and completely replace cash. The digital economy has become a buzzword in Chinese political circles in recent years, and the PBoC is determined to lead the world in CBDC and cashless society drives. Other Asian nations, such as nearby South Korea, have also launched IT-powered cashless society drives of their own. The state-run media outlet CNY last month published an interview with Kent Matthews, a professor of banking and finance at the UK's Cardiff University. In the interview, Matthews stated that the proportion of cash in terms of the total amount of yuan in circulation had dropped to 3.7% and is continuing to fall. Matthews said that China was on track to becoming the world's top country for cash-free transactions, although he claimed it would be impossible for any government to legislate cash away. The academic noted people are using cash much less today than they were 10 or 20 years ago. The trend toward a cashless society is inexorable. Mu further claimed that existing interbank payment and clearing systems can still meet the needs of China's economic development. He said that there was no need to replace existing networks with the central bank's digital currency system. The PBoC chief claimed that conventional and CBDC networks can be fully interoperable and seamlessly connected. Mu concluded that CBDC smart contracts could be used to boost the efficiency of Chinese wholesale payments,